Guys, how we doing? I'm Ryan Mack. Welcome back to another edition of the Trading Guys, and we're going to smash out this week's weekly review. Okay, I'm absolutely exhausted. I am just in my house, 10 minutes ago. I was away to make content out in the jungle. It was a total fail because of the weather and all these the location being pretty shit and blah blah blah. It's just sometimes you go to make content and it just fails, right? So that was a fail, but it was a 3-hour drive there last night, going and checking the waterfalls, and we already set up the ropes and stuff to abseil down the waterfalls and blah blah blah. It was a fucking disaster. So we just packed up and came all the way home. But I'm exhausted. I've just driven another 3.5, 4 hours back. I'm just in the door, had a quick shower, straight on the screen so I can get this done and dusted, and then I can chill for the weekend, all right? Excuse me. So I'm going to go through this as quickly as I can, but of course we have to do this every week. We have to do it thoroughly, right? Or what's the point in doing it if you're going to half-arse it, right? If you're going to do something, you may as well do it right. So, again, for those of you that watch my channel on a regular basis, I'm going to repeat myself, and that's on purpose. One, because trading is, once you get into that habit, once you get into that weekly schedule, it becomes a habit, right? You're just doing the same shit over and over and over again. Nothing changes. And if you're new to my channel, then of course, I'll explain it as we go on. So what you want to do is grab yourself a notepad and pen. You want to write trades or this week's trades or fundamentals, whatever you want to write, okay? Below that, you want to write strong, weak, and neutral. Again, if you're new to my channel, you may think, well, that's not very logical. It should be strong, neutral, and then weak. I understand that. The reason why we do strong, weak, and neutral is because, excuse me, once we review these, the news, the data, right, we then mark down which economies are which economies are strong, which economies are weak, which economies are neutral. Once at the end of it, we have a copy of that. What you do is you score out the neutral and you match up a strong economy with a weak economy. For example, pound yen, USD yen, pound CAD, AUD USD, these kind of things. And that's how you trade, guys. You want to find the best way to trade and find the trend, whether it's an uptrend or downtrend, doesn't matter. But the way you find the trend is you need to find divergence between two economies, i.e. British pound right now is a fucking powerhouse. Japanese yen is absolutely dog shit, right? Dog shit. So there's a massive divergence between these two. So right away you're going to be buying pound yen, right? You're not going to be, you wouldn't invest your money in the yen over the pound because the Japanese economy is absolutely shit. So why would you invest in it? Because it means your chances of getting a return are very low and your risk is very high. If you invest in the pound, i.e. if you invest in the British economy by buying the pound, your chances of getting a great return is very high and your risk is substantially lower than investing in Japan, right? That's how it fucking works, guys. I'm telling you. If you are a scalp trader, you don't really need to learn fundamentals. Will it help you? Yes, of course it will. Of course it will, because you know exactly what you're then looking for, right? But you don't need it to be a scalp trader. There's plenty of people that don't use fundamentals. But if you want to, take this seriously, and if you want to enter a trade today and confidently be able to let that trade run for 2, 3, 4, 5, even up to 12 weeks sometimes, then you need to learn fundamentals, because when you get a pullback, all markets pull back, right? If you look at USD Japanese yen right now, it's pulling down, and you'll think, oh my God, the yen's, let's sell USD Japanese yen. Yeah, you could sell it if you're a day trader, but that's not the real trade. The real trade is waiting for that to pull back. That all that is coming down, right? The yen is not strong. The USD blows Japan. The US economy blows the Japanese economy out of the water. So USD, Japanese yen, is buys all fucking day long. So why is it coming down now? Because if you follow the news, if you follow fundamentals, the Bank of Japan are like, holy shit, our economy is so fucked, we need to do something about it. And they're injecting all this money into the markets and bonds and 800 billion yen in bonds and all this bullshit, which is having the effect of pulling it down. But the yen is not strong. It's just, they're just trying to fucking save themselves, right? And that's why you're getting this pull down. But you would still always be buying Japanese yen. And when you learn fundamentals and you stay on top of it every single week, what happens is, if you're in a buy and it comes back down, you're not thinking, oh shit, I better close that now. You just know, oh, this is just a pullback. So instead of closing it when everyone else is closing it, you're just looking for, where's this going to pull back to? It's probably going to be this area here because it's an area of value, blah, blah, blah. And you're looking for an opportunity to scale in to the trade and let it run for even longer when everyone else is shitting their pants because they see a candle coming down, they don't understand why it's coming down. You know, I mean, if you want to close partials, if you want to close 80%, and when it comes down again, enter a new trade and keep 20% running from the old one. Blah, blah. Of course, you can do that. That's fine. But in learning fundamentals, it gives you the confidence because you see the market coming back. You're like, this is just a pullback. How do you know? Because that economy is 100,000 times stronger than that economy. And, the data isn't changing. This data is getting worse. That data is getting stronger. So therefore, I know when this market's pulling down now, that's simply a pullback where I can look to add to my position and make even more money when it cracks on, That's how we do it, guys. So without further ado, let's get on with this because I am knackered. But regardless, if we're tired, right, we need to do this shit every week because we are disciplined motherfuckers, that's why. So as you know, when it comes to reviewing data, I always do each currency individually except from AUD, NZD, and China, right? The reason why I do these three together is because they're all very closely correlated. AUD and NZD are very closely correlated to China, okay? If China's doing well, AUD will start to do well. If China's doing bad, AUD will do bad, okay? I'm not going to explain why it is. I explain in every fucking video. So just jump back to one of my last videos and you'll know why. But I wanna smash this video out today, okay? So let's see our data this week. So AUD and NZD have been weak for me for quite a while now, a couple of weeks. Excuse me, and I don't see that changing. NZD, shit. Inflation, shit. Retail sales month on month, slightly better, but it's only month on month, right? We really want to see, the quarter on quarter, year on year is the one we really want to see, and of course, retail sales month on month being up just now. Well, it's kind of obvious, right? Why is that? It's fucking Christmas, so we expect it to be up, right? Job advertisements down. Building approvals is down. So, in order to read this correctly, this is very important that you understand this, okay? If you look here, you'll see it says 4.2% and it's in green, okay? You see that? It's in green. Do not look at that in green and think, oh, that must mean good. No, it's not good. Excuse me. If you look at the previous, it was 5.8%, right? So building approvals is basically like new build homes, right? And why we want to see that percentage higher, because if more have been approved, it means the banks are giving more money in mortgages, right? Which stimulates the economy. Excuse me. So that's why we want to see that high in the first place, okay? When you see it here and you say, 4.2, that's lower, but it's green. Oh, maybe that must mean good. No, it's not good. So why is it green then, Ryan? It's green because it was forecast to be at 1.2%, a massive drop from 5.8, and it came in better than it was forecasted. That's why it's showing green, okay? Don't let that confuse you by thinking, that must mean good. It's not good. That's bad. That's negative news. It just came in better, all right? Company operating profits quarter on quarter. Yeah, it's better than before, but it's still dog shit compared to what they expected, right? Cakes and manufacturing PMI. Look, so, pardon me. China is now doing better, right? You can see, remember, anything below 50 is bearish. When it comes to services PMI, manufacturing PMI, blah, 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 anything below 50, 49.9 downwards is bearish for the currency. If you look at a currency 1 week, when the previous was 47.2, and you look at it this week and it's 48.9, yes, it's good news that things are getting better, but it is not bullish. It's bearish, okay? Anything below 50 is bearish, negative for the currency, all right? Anything above 50, 50 upwards is bullish, all right? Now, China's been in the hurt locker for quite a long time, a good year or so, especially the last couple of months. They've been below this. Now they're finally above 50. Look, previously it was 50.3. Now it's 51.5. This may be because it's Christmas time and production ramps up for toys and all this other shit that's made in China, right? So we have to take that into consideration. This may not be a real number. It could be a Christmas number, okay? Christmas numbers, they give short-term, strength, but over the long term, as soon as it gets to January, it all dies down again, right? So we have to bear that in mind. It may not be, but we need to keep that in mind, okay? So far, China's looking good. Overseas trade commodity, overseas trade index, slightly up, quarter on quarter for New Zealand. Current account in Australia is slightly up, but it's still bad, right? Minus 14. GDP price index is bad. Commodity prices up, good. GDP quarter on quarter. Now again, don't be fooled that that's red and think, oh, that must be bad, right? It's good. Look, if you look at the previous, it was 0.2. Now it's 0.3. That means it's up. The GDP has increased. So why is it red? Because they expected it. They forecasted it to come in at 0.5 and it's came in lower than it was forecasted, okay? That's why Forex Factory have made it red, which I think is shit, because for people that don't understand how to read this and how to interpret it and, put that into what does that actually mean for the market, then you're just going to think that that's bad news, okay? And it's not. Cakes and Services PMI, 51.5, that's fine. So remember, every single country has both services PMI and manufacturing PMI, right? But some countries are predominantly services and some countries are predominantly manufacturing, right? So, for example, China, everyone knows that's a manufacturing country, right? But of course, they provide services. So, overall, we would expect that the services are below 50 because it's not a services providing country. But in this case, they're above 50, which is bloody fantastic, right? Even though it's came down since previous, it's still above 50. So that's fantastic. And ignore the fact it's only red because it's came in lower than before and lower than forecast, right? But it's still fantastic, okay? Why? Because it's above 50, so that's bullish. The UK, on the other hand, we're not a manufacturing country. We are a services providing country. Okay, so we expect manufacturing to be below 50, and that's perfectly normal, but services we expect to be above 50. If both are above, fantastic. If both are below, terrible. Okay. Yeah, so for me, so with China here increasing, if China's manufacturing keeps increasing, how does that affect the AUD? Because China does about 80% of its business with Australia in terms of, because Australia's known for mines, right? It's a commodity currency. It heavily relies on commodities. So if China's doing really shit and their manufacturing is very low, they're not going to be purchasing all the stuff from the mines, steel, nickel, copper, iron, tin, blah, 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 from Australia. When manufacturing increases in China, they then purchase all of that stuff from the Australian mines. And that's why Australia benefits, okay? New Zealand relies on dairy, cheese, milk, lamb, New Zealand lamb, right, and all that. So, yeah, their economy's pretty shit. Sorry, well, let's see what we've got next week. Yes, next week we have got a decent week for news. So we've got a lot of news that we want to see next week. Okay, we want to see CPI. Yep, it's year on year. PPI. Yep, new loans. Yep, new loans are important because if they're giving out more loans, what does that mean? It means more people have got money in their hand. If people have more money in their hand, what they're going to do? They're going to buy loads of shit with it: online shopping, hotels, restaurants, and that stimulates the economy. Stimulation of the economy means good for the currency. Okay. Not that we care because we don't trade the Chinese economy, but it's this, don't trade the Chinese currency, sorry, but it's the same for all economies. Trade balance, we want to see cash rate, RBA rate statement. Yeah, we want to see what we want to see if Australia drops rates. They could cut rates. I'm not saying they will, but they could because, their economy is not that good. Employment change, we want to see that. Unemployment rate, we want to see that. Okay. So yeah, we've got some decent news next week that we want to see. So for me, I'm still sticking with AUD is weak and NZD, New Zealand, is weak. Same as last week. Okay. Yes, it was. Aye. So yep, writing down here underneath week NZD and AUD under week. Okay. Now move on. Let's fucking smash this out, boys. Now that we're doing one-on-one, you'll see that it gets much faster, okay? Because I'm dying to get off today as well. But this is very important. You have to do it every week. I'm not saying you have to know fundamentals to make money in the market, right? I made money for years without knowing fundamentals. But honestly, somebody showed me the fucking light one time. It's like, Ryan, learn fundamentals. And I thought, do you know what? It's the only thing left in the markets that I haven't bothered to learn. And once I learned it, I swear to God, guys, I could not believe that I had ever fucking traded without knowing fundamentals. I just couldn't fucking believe it. I was like, you idiot, you know? Because when you know fundamentals, you now know why you're taking a trade. If you took, let's say you took a sell on GJ right now, and you're like, why the fuck are you selling GJ? Oh, because it's going down. Yeah, that's not a reason to sell it. It's not a reason to sell it, right? You need a reason. So when you're trading money, right? If you're selling GJ, that what you're actually doing there is you're saying you think the Japanese economy is better than the British economy. So by buying the Japanese yen, i.e., selling the pound, you think this is what you're essentially doing. You think that the Japanese economy has the higher potential to give you a good return on your money with lower risk. And you then think that the British economy has a lower potential to give you a return with a higher risk. And that is not the case. When you know fundamentals, you're like, the pound, the British pound is a fucking powerhouse again right now. The Japanese economy is in shit state to the point where the Bank of Japan, if you look at the news feeds, they're like, we don't know what the fuck to do. Like, our yen's fucked. We don't know what to do. So why would you be selling pound yen? It's just because you don't know what you're doing, honestly. And I've been there. I have been there. This is why I like to do this shit for free and help you guys. People charge fucking 500 quid for this stuff. Honest to God, go and look at guys. One of my good mates, Ken Chigbo, charges 500 quid for this stuff, you know. I give you it free every single week. Because I know what it's like to want to trade and have no fucking money. I know what that feeling's like. Anyway, CAD, manufacturing, a PMI. CAD is doing quite well. What did I have it down last week? I had it down as weak because it was doing shit, yeah. But let's have a look. Well, overall, the CAD is shit, to be honest. But look, manufacturing PMI is up. That's really nice numbers there. Labour productivity, -4. Why is that green? It's down because it's minus. Strange one. I don't know why that's green, but again, it'll be something stupid with Forex Factory. Trade balance is getting slightly better. Employment change is phenomenal. But again, why is there such a massive jump? Last month, employment was 14.5k. This month, 50.5. Why? Because it's Christmas. What happens at Christmas? You got all these extra Christmas seasonal jobs, right? Because you need more people packing orders in factories and all this other bollocks, right? You need more people delivering fucking DHL, Amazon, and all this other stuff. So that's why employment change has skyrocketed, right? It's extra Christmas jobs, basically. Unemployment rate is, it's actually increased slightly, so that's not good. IVPMI is 52.3. That's fantastic. Again, don't be put off that that's red and think, oh, negative. It's up. Look, previously it was 52. Now it's 52.3. That's growth, okay? It's not expansion. That's not everything, that's expansion. If we look here, they forecasted it to be 53.1 and it came in less. That's why it's red, okay? But that's good. Like I told you, anything above 50 is bullish. So Canada, in the short term, okay, right now, would you class it as strong? Because the economy isn't strong. This is the point, you know. I'm going to put it down as strong for now, but in my mind, it's going to be short-term strength, okay? I just know this in my mind. I'm putting it down as strong for now, but it's short-term strength. What else do we have to remember when we're looking at the Canadian dollar? The Canadian dollar is massively tied to petrol, to oil. Okay, excuse me. Oil is absolutely dog shit right now, and it will be for quite a while. China was responsible last year, excuse me, for buying 70% of the world's oil. This year, they have bought 20% of the world's oil, leaving a massive 50% of demand, which cannot be filled. There's tons of oil companies around the world that are just on standby right now. They've stopped pumping. They're just pumping dead slow and getting minimum barrels out because the price is so shit. When the price of oil is below $75 per barrel, oil companies are instantly losing money, and I think it's like $67 a barrel right now. Okay, they're instantly losing money because it costs them $75 a barrel to get oil out the fucking ground. Okay, the reason why they don't keep pumping it and storing it is because it also costs a bloody fortune to store oil. So they'd rather just go and standby and just pump out the minimum and try and think of ways to build up the demand again. Okay, that's why. Yeah, I'm going to put that there. Let's have a look at what we've got next week for CAD. BOC rate sentiment, rate statement, sorry, overnight rate. So they're expected to cut rates by 50 basis points. Okay, now I'm not going to cover again why when people cut rates it's negative for the currency. I covered it in last week's video. If you literally go to last week's video, you'll see it. Okay, I'm not going to cover it again. In every single video because it gets boring for the guys who watch my video every week. But yeah, potential rate cuts. Okay, so we need to look into that. Manufacturing sales month capacity. Okay. So this week, short term, yeah, I'm not saying the economy is good, but numbers are getting slightly better. Okay, Canada in the short term is under strong. Moving on. Come on, I want to see this week first. CHF's always, it's always plain and boring, but we just check it anyway, right? It's not a manufacturing country, we don't care. CPI, yeah, boring. Unemployment rate, same. Yeah, okay. Yeah, boring. I always put CHF in neutral, right? It's one of those weird ones. I just always place it in neutral. There's a time and a place to trade CHF pairs, right? And it's when we change sentiments from risk on to risk off, and it's just a very brief change. It only lasts for a couple of days to a week, and then markets will jump back to risk on. In that period of risk off, you want to be buying CHF, okay, against whatever other currency is in there. It's a bit complicated to explain in this video because I just want to get it fucking over and done with, but that's when you would really trade CHF, okay? Is when the risk sentiment changes from risk on to risk off. Euro, let's have a look. So when it comes to Euro, the only ones that we really care about are France and Germany, but of course we do look at all of them, right? Spain, Italy, blah, blah, blah. But the only ones we really care about is like year on year, France and Germany and all that. Because France and Germany are the two major economies which really push the Euro or tank the Euro. So politically, France is in absolute shit state right now. They're having this massive scrap internally among their politicians and is it a prime minister or president? Is it French? Yeah, president. Sorry. Yeah, and they're just trying to kick him out, and they've got this right wing, left wing bollocks going on. Yeah, France is in shit state. Is the point? Let's see what we've got. Spanish manufacturing PMI is decent, but I mean it's not a manufacturing country. You know what the fuck do they make? Olive branches. Italy manufacturing. Look, so you've got this bullish, bearish, 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 bearish. Unemployment, that's slightly good, but it's Italy. Who cares? Nobody even lives there. Unemployment rate, Euro, same, sticky. Spanish unemployment, who cares? Who cares? Spanish service PI, bullish, bearish, 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 bearish. It's all bearish, guys. The Euro's fucked. The Eurozone is fucked right now. So, I mean, you know, I don't even need to tell you. Stevie Wonder can tell you that that's weak, okay? Let's see what we've got next week. OPEC meetings, main refinancing data. 340. Yeah, so let's see if they're going to cut rates. Look, it's anticipated that they're going to cut rates, and they should cut rates because when all numbers are low in a particular economy, that's when you can cut rates to kind of in line with inflation. If numbers keep coming in strong, you can't cut rates when numbers are coming in strong because you'll end up with inflation running away, and it'll be a disaster trying to get it back, right? And that's when you get big market crashes and blah blah blah. Okay. So yeah, I suspect they will cut rates. So yeah, euro is weak. Moving on. Nationwide HPI is massively positive, a huge jump. Final manufacturing PMI is down, so that's bearish. But again, the UK isn't a manufacturing country, so we don't really care about that, right? But we do need to take it into account for sure. Yes, absolutely. Retail sales monitoring year on year is massively down, which is strange because why? We're coming into Christmas. This should be quite high just now. Final services PMI is bullish and increased, fantastic. Construction PMI, bullish and increased, fantastic. Halifax HPI, that's mortgages. How many mortgages have been approved? That's taken a massive jump. Fantastic. Okay, pound is still strong for me. Pound is, as you can see, if you look at pound CAD, pound AUD, it's fucking flying, right? So look, this is how it works. Look, pound strong, AUD weak. I then know I'm fucking buying pound AUD. I'm not going to invest my money into a shit economy, am I? I'm going to invest my money into the strong economy. So I know when it gets back to these areas, that's where I'm going to buy the fucking thing. Boom, boom, boom. You see? That's how it goes. Same again here, look. Canadian economy was dog shit. Pound is good. Pound good. Canada dog shit means pound strong. Up. Boom. There it is. Bang. Fucking bang in there. Look, bang in the zone. Bang in the zone. These are just areas of value. That's how you feel. Well, how do you know it technically? This is just technical analysis. Areas of value. That's another fucking video, right? But look, you can see it fundamentally. Pound is strong. Canada's shit. What am I going to do? I'm going to buy pound fucking pound CAD. Now, this will start coming down, guys. This will start coming down. It's a retracement. Why? Because banks, what they'll start doing is when it gets up to these areas, they'll start taking profits, boom, boom, boom. They're taking hundreds of millions, if not billions, off the table, and the market starts coming down. They don't enter sales. Just by taking profits off the table, the market starts coming down. And have you ever noticed that when markets come down, they come down rapidly, right? Look, goes up, boom, rapid down. Oh, sorry, goes up, boom, rapid down. Goes up, boom, rapid down. Why is that? Because when banks take profits, they can take profits as quick as they like. Bang, 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 close, 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 close. They can take as much fucking profits as they like. When they're entering trades, have you ever noticed that markets go up slowly? Up, dum, look, ding, 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 look, ding, 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 ding. Ding, ding, ding. You ever notice they go up slowly? It's because banks they've got so much fucking money. They need to scale in constantly. They can't just lump in like you and I and go, 20 lots in. They can't do that. These guys are trading fucking hundreds of millions at a time, if not billions. So they need to scale into the market. So they'll just fucking, they'll just get massive slippage and they'll wipe shit out and they'll fucking end economies, right? That's why whenever you see a slow movement, that's the real movement. Whenever you see rapid movement, that's profit taking, okay? So when this pulls down, you just ignore it. If the data is still the same, or pound is a fucking powerhouse, and Canada is shit, or AUD is shit, or whatever, then you just wait for the pullback. Wait, when everyone else is jumping in. I see all these people that are jumping into sales. If they're day traders, scalpers, that's fine. So ignore that. I know we all trade differently, and that's fine. And just if you're a long-term position holder and you want to enter on tiny risk and let it run for fucking weeks and weeks and weeks and make shit tons of money with minimal work, then you want to be waiting for this to come back down to your zone, lump in, and just let it go, okay? In line with fundamentals. That's how it works. I've just showed you it here, and then I've showed you what it looks like on the charts, right? And I can do it for anything. Crypto, fucking oil, gold, indices, you name it, it's all the same once you learn fundamentals. And once you learn fundamentals, you get people that say, "Oh, I just trade GJ because I like it. It gives big moves." You don't need any of that bullshit. Once you know fundamentals, you can trade the entire fucking market because you understand why it's moving. It's so important. All right. You don't say, "Oh, I like one pair." Well, that's not fucking trading, is it? If you can trade, you can trade. Yeah, pound is a powerhouse, lads. If you're scalping, I understand that. You're going to look for certain pairs, right? You don't want to be scalping on pound AUD or AUD NZD because they're dog shit. You could be in it for fucking ages and you get, 5 pips and you've been in it for fucking 4 days. You know what I mean? So that obviously there's differences. When I'm talking about anything here, I'm talking about long-term swing trading, right? What we got coming up this week, guys? Give me a second. Consumer confidence, GDP month on month, construction output, goods trades balance, index of services. Okay, so when it says good trades balance and it says minus, when it's minus, that means a country is importing more than they are exporting. Okay, which leaves you in a deficit, i.e., a minus, which is not good for an economy, right? When you're in a surplus, let's say this was positive 16 billion, then that means a country is exporting more than they are importing, which gives them tons of money, okay, which is a good thing, which gives them a surplus, not a deficit, all right? If it's minus, that means it's a deficit. So that means they're importing, i.e., spending more than they're exporting, right? Spending more than they are receiving money. Okay, so we've got some news for pound next week. Not a massive we can use for pound, but yeah, we'll take what we can get. So pound is strong, and I will do a summary at the end. So if you've missed one or two, don't worry, I'll cover it. Japanese yen capital spending quarter on year is up. Final manufacturing PMI dog shit, bearish. Monetary base dog shit. 10-year bond auction shit. 30-year bond auction still shit. That's because that's only going up because the Bank of Japan are doing it themselves. They're intervening themselves. It's shit. Average cash earnings year on year is up slightly. Whoopie doo. Household spending year on year is down again. Don't be fooled that that's green, thinking, oh, that's good. Look, it's down since previous. It's only green because they thought it was going to be minus 2.6 and it came in better than they forecast, right? So it's that's why it's green, but that's shit. Leading indicators, yeah, shit. What we got next week? Yeah, we've got this week coming up. Yeah, we've got final GDP price, economy watchers, prelim machine tool orders. Yeah, money stock year on year. Yeah, we've got a lot of news that we want to see next week. I mean, it's not going to change anything. The yen is dog shit. Okay, so yeah, yen is weak, but we didn't expect anything else. So look, when you look across here at pound yen and you see this coming down, you're like, but how can it be weak if it's coming down? This is the the Bank of Japan intervening. They're pumping bonds and selling dollars and all this shit to force it down, right? Because their market's wank. This is not the real move, right? This is not the real move. This here was the Bank of Japan intervention as well. This year, right? You just want to wait for it to hit these zones, then we're going to lump in. It'll go. All right, that's what you're waiting for. Look, can you trade that and make money? Of course you can. And our group traded this last week's sales with my business partner Lee, and they made money because he does scalps, right? I do swings, and Lee does scalps. So you can make money doing it. I just don't touch it because I'm a long-term trader, right? Whereas my business partner Lee, he's in and out the same day. So there's a million ways to skin a cat. I'm not saying my way of trading is a be all and end all. If you have a way of trading that works for you, you crack on, mate. I'm not saying my way is great and your way is shit. Absolutely not. If your way works, you crack on. I'm just showing you the fundamental side of it and how you can use it to your advantage. All right. What the fuck is that? NZD? I must have clicked the wrong one. My bad. I went to check next week for Japanese yen. Oh, I've checked that. Sorry. Again, I've checked that. My bad. I'm fucking waffling on here, so I get confused. Right, it was a big week for USD. Let's have a look. So, just at a quick glance, I can see we've got mixed data here, right? Bearish, but it's getting stronger. See, bearish, but it's getting stronger. Bullish, but that got weaker. Bullish, 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 bullish. Non-fat bullish, bullish, bullish. Same, it hasn't changed, so it's still bullish. Challenger job cuts. Job cuts is less, so it's bullish. Unemployment claims is slightly higher, so that's bearish. It's negative. Trade balance is getting better. Don't care about gas. Average hourly earnings is sticky, so that's fine. Non-farm payroll change is massively up. So let me just think, why is that green? It shouldn't be green. Unemployment, non-farm. So that's not good. That should be red. I don't know why it's fucking green. I don't have an answer for that, but that's not good. Like, even if you're confused and you click on this little folder here, it'll tell you. Change in number of employed people greater than forecast is good for the currency. Oh, why is that? Wait. Change in the number of employed. Oh, sorry, my bad. So that is good. My bad. Sorry, I had a brain fart there. Yes, that means there's far more people employed in jobs outside of farming and blah blah blah. But again, we expected that. Why? Because it's Christmas time, right? My bad. I had a brain fart there. So that's bullish again. That's very good news. A massive jump from 36k to 227. Unemployment rate is up slightly, but I mean it's still okay. Up. Bullish. So everything about the USD right now is bullish, guys. Fucking bullish. So it's strong. Now I'm going to show you something here. If you come across to the DXY, look, we're just at a zone here, right? Where it needs to pull back. It needs to fucking pull back. So you'll probably find it will pull back to here and then it'll start taking off again. Why? Because banks will do anything before they buy something overvalued. They just will not fucking buy something overvalued. They will manipulate this down to create liquidity because everyone that doesn't know about how to read fundamentals and understand how the way the fucking economy works, they'll just push this down, and all these retail traders who are shit, they'll just be fucking entering sells against the USD, Japanese yen, USD, cat, all these other pairs. And it'll get to a certain point of value and it will just fucking take off like this. Boom, 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 right? It'll just take off because it's reached an area of value, okay? So we want to wait for these pullbacks. They're just pullbacks. There's not, oh, the USD is weak. No, it's fucking not. It's a pullback. So they can enter at value. It's all it is. Let's see what we've got next week. Nice short video, this one, guys. 37 minutes. Bosh. What we got next week? Core CPI. Yep, CPI next week. Lovely jubbly. Core CPI. Unemployment claims. Yeah, so we've got decent news next week. So let's just do a recap. Strong. CAD, GBP, USD. Weak. AUD, NZD, Euro, Japanese Yen. Neutral, CHF. That's it. So now what you're going to do is you can score out CHF if you wish, and you're now going to look for so you're going to be looking for areas where you can buy pound AUD, pound NZD, pound Euro, pound Japanese Yen, USD AUD, or if it's AUD USD, sorry, then you're going to be looking for sells, right? AUD USD, USD NZ, is it NZD USD? NZD, NZD USD will be sells again, right? USD Euro, you'd be buy, or if it's Euro USD, you'd be selling. CAD, I wouldn't really go against, CAD, and yeah, CAD's a weird one because it's giving you short-term strength, but it's not a solid economy that I would, you're not going to put your fucking house on it like you would put your house on pound and USD, right? So now all you do is you then jump across here and you look at the potential pairs. So you can mark down here, pairs. Like this, just write down pair, put a line, right, pairs. And now we're going to look at, just write down GBP AUD. GBP. I don't trade GBP NZD, so I'm going to miss that out. I don't trade pound euro because it's shit. JPY. AUD, USD. Let's have a look. NZD, USD. Japanese yen pairs I'm staying away from, guys. So I could be doing, well, I've wrote bloody Japanese yen down there, which I shouldn't have. Let me just check. What else have we got here? CAD, no. GBP NZD, I don't trade that because it's wank. No. Look, I had it marked up. Look, you can see. Boom, boom, boom. Away it goes. But it's a wank pair, so I don't even trade it. It's one of those pairs that it's classed as an exotic, so the spread is always really high, and you're in it for like 3 weeks and you've made about 20 pence. Right? It's fucking pot. Why would you even bother? So I don't bother. I only have it here for education purposes for the guys in our Discord, all right? Because some of them might like to take it. I just don't. So yeah, I'm looking at Let's have a look. AUD CAD is potentially AUD CAD potentially sells. Potentially sells. So what I want to see now, wait, I'll just remove this. I already know what I'm looking for. I can see it a mile off. So here we go. There it is. Bish, bash, bosh. What we're looking for, guys, is this. Boom, boom, boom. Right? This is where we're looking at. I'm going to put, there we go, my alert right. I'm going to move it up, so I'm going to put my alert here. And as we're looking for cells, I'm going to change that to red, just as a reminder. So now I'm just waiting for the market to come back up, retest this zone, and then melt. Okay, that's it. So AUD cells is AUD CAD. Just remember with Canadian dollar, this is short term, right? And we have broken below the 200 EMA, which also confirms you're now looking for sales, okay? We'll write sales above here. Joy, can you turn the light on, please? It's getting pitch black over here. ADCHF, not going to touch it. AD Japanese yen, not going to touch it. So I'm going to turn that off. AUD USD, yes, it still sells, guys. We need to wait for this. We need this retest up here. Or, I mean, we could potentially get a retest here, right? We could get a retest of this zone here. So it could be that. Boom, 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 right? We'll look for any of them. I'm going to move one of these down here. So I'm looking for either of these, okay? This here isn't a good one. Why? Because there's not much value, right? How do you know if it's value or not, Ryan? Because you use your fucking Fibonacci, drag that fucking thing down, and that the Fibonacci numbers tells you value. 382, absolutely dog shit. You want it to be coming up and really retesting at a minimum, the 500. What you really want to be looking for is a retest of the 618, the 786. That's what you really want to be looking for. But we may not get that. However, it may be, let me just show you. There it is right there. Small candle, large engulfing, bang in the 618. So, sorry. There we go. Let me just remove this. The best trade for me is if we get this, guys. Bish, bash, bosh, right? That's the best trade right here. That'd be lovely, fucking jubbly. However, this one here, which I've got the green line in, is probably the most likely, okay? This one here is dog shit. I've just marked it up so you can see the potential areas, but it's dog shit. If the market comes to here, I wouldn't be taking it. I would just be walking away, okay? I want it to at least come to here minimum before I would take it, or even better still, up here, all right? Euro AD, yeah, pump look again. See, system works. Boom, boom. But the both of them are wank. Again, look. Bish, bash, bosh. Precisely. We took the sell down. I did have this buy marked up, but I fucking missed it. But we did take the sell down. I just missed it because it panned out when I was in bed. Shit. It's Japanese yen. I'm not touching it because I'm not touching yen pairs because the Bank of Japan are just intervening non-stop. Again, look, here it is. Look, boom, boom, hit again. Away it goes. Every single fucking time. Look, boom, 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 boom. Why is that? Because it's areas of value and banks buy from value. That's it. I'm not saying I trade like the banks. I'm just telling you, banks buy from value. Look, boom, away. We can't take this yet. It's too high now. You need a retest and pull back to at least this zone here. All right. So I'll still keep it marked up. We want to buy it, but we want it to test this zone right here. All right. So I need to move this up to about here. So we get the early warning. It can also, that one's already played out. So let me just amend this. Boom. If this happens, happy days. All right. Okay. No point in that. It's really shit. Again, look. Even though this is shit, look at it. Look at every time we've marked up a box. Look, bang, hit, bang, small candle, large engulfing, bang, hit, boom, away it goes. Small candle, large engulfing, draw you up your box, bang, hit, away it goes. Every freaking time. Small candle, large engulfing, comes back. Every time it re-hits that zone, it goes. Every time. Why? Because that is an area of value. Pound NZD, same again. Bosh, away it goes. It's a really shit pair. I don't trade it. I'm going to turn that off. GBP USD, I didn't trade this, nor would I really want to trade it because it's two strong economies, right? It's a strong against a strong. I don't trade it. I simply mark this up just to show the guys, okay? But it's a strong economy against a strong. What you'll find is, while the USD is coming down, showing the signs of weakness, you will get this coming up. And the minute this gets to around about this area here, or even this area down here, USD will come strong and it will start absolutely melting again. You'll find that that's what happens, okay? NZD USD, it sells. We don't really want this. This is the 3.8 Fibonacci. There's no value here. Can the market come here, reject, and absolutely melt? Yes, it can. But there's just no value for me. I would probably ignore that trade if I'd done it. The one that I'm waiting for is this, right? I want it to come back up, retest this zone right here, then I would enter it, and then we'll take the sells, okay? NZD CAD, two shit economies. Sorry, if I go back to NZD USD, now when this comes back up here, it's just a retracement, guys. It's not that the New Zealand is stronger than USD. It's fucking impossible. No way. It's just a retracement because banks are all cashing in, taking their profits, and the market's rising. Then once it gets to an area of value, right, let's buy it now. This is a good value to purchase. They'll purchase it, i.e. they'll buy the USD and it will fucking melt. That's the real move, okay? Dog shit, because it's two dog shit economies. But what you may find is, look, it's at this zone, right? Canada had some strength last week. If it shows strength again, you may find this pulls down, okay? But I'm not going to touch it. It's shit. Again, shit. USD CAD should be buys, and it is buys, Away it goes. I'd really wait for the pull back and then go because it's a really horrible zone. I'll show you. Look, look at that. You don't want to be here's the all-time highs. You don't really want to be buying at all-time highs, right? You need it to pull back first, area of value, and then away it goes. So yeah, if you're a scalp trader, whatever, you can crack on and trade that. But it says USD CHF. Yeah, I'm ignoring that. USD Japanese yen. I'm ignoring that. I'm not taking that. Oil's really shit just now. All the big oil companies are really halting production and waiting for price to go up. So yes, the price could go up, but right now that's just a retracement. The real move for oil right now is bearish. It's oil's in the hot locker right now, guys. I know we say, oh well, I think it's going to go up. It will fucking go up, right? It will go up, but that's not the real move. That's just intervention because they're like, "Fuck, we need to do something here," and they'll just intervene and push the price up. You want to, you can, if you're a scalp trader and you're into taking bullshit trades, you can take that and make some money, right? The real trade is when you wait for this to come back up, retest this zone, rejects, and then fucking melts. For now, when that changes and we start looking for buys, is when demand outperforms the supply, right? When the demand is massive and supply is small, that's when we start looking for buys. But just saying, oh, I think it's going up. Who gives a fuck what you think? You know, if the market moved based on my thoughts, I'd be a fucking gazillionaire, and so would you. The reason why you're not is because that's not how fucking markets work, you lunatics. Right? They work based on data. If people are buying fucking oil, the price will go up. If people aren't fucking buying it, the price will go down. That's how it fucking works. And people ain't buying it now. Silver. I love silver for buys, guys. That was the best gold buy right here. Excuse me. I love silver for buys. It just so for buy, it needs to break this. It needs to hold on. It needs to really break this for me. Retest here and go, or come back down here, retest and go. All right. Copper. I'm actually in buys for copper right now. Indices. Let's have a quick look. Indices are just always buys, guys. Oh, you'd never want to be selling fucking indices. They're amazing. Look at that. Holy shit. Yeah, so that's it, guys. Okay. Hope you enjoyed it. This is the last month. We are doing a free month on our premium Discord. We just had too many fucking Indians coming on, and they would ask bullshit questions, which were so fucking annoying. And yeah, it was just a load of shit. You'd be showing them something on the daily time frame, and they'd be like, "What about the 5 minute?" Who gives a flying fuck, you know? And then whenever the free month cancelled, they would put in their wife's email address to get another free month. You know, we can't be fucked with brokies, guys, because they're just time wasters. They are tire kickers, and they'll never learn because it doesn't matter what information and advice you give them, they don't listen to you. You know, they don't make any money in the market, but they know better than you. You know, it's one of those kind of fucked up situations. So I don't think we're allowed to say we're banning all Indians, but it's Indians that are a massive pain in the fucking arse. So yeah, we're just gonna bin off the free month. All right, guys. Obviously, if you're a good Indian, no offense, but if you are a good Indian, you know exactly what I mean, right? Fucking a lot of your people are a pain in the dick. They're just fucking time wasters, man. They're just annoying as fuck. So, yes, guys, I hope this has been useful for you. I am away to spark up a cigar because I'm fucking knackered, and I hope you have a great week. I hope you have a good trading week, and remember, we are coming in to December now. We've probably got about a week left, you know, of potentially getting anything. After this, markets will become absolutely dog shit. The last 2 weeks in December, the first 2 weeks in January, you know, blah, blah, blah. Markets are really, really shit. And that's perfectly normal, okay? So don't worry about it. Don't take something just for the sake of taking it. If a trade presents itself, by all means take it. If it doesn't, don't try and chase something which isn't there. Just hold on to your money and better trades will come, okay? Much love, guys. Don't forget to jump across. You can follow us on Instagram at the Trading Guys as well, or you know, on YouTube, Facebook, the Trading Guys, blah blah blah. All right. If you want to jump on the free month, you can jump on the free month now. Again, we've had some other brokies jump on instantly. Sign up for the free month and then instantly cancel it. If you sign up and instantly cancel it, the system isn't going to give you access. You fucking psychopaths. It just bins you off. It gives you access for 10 seconds, and then when you cancel it, it fucking removes your access, all right? So there's no point. But this is the last month. Much love. Have a great weekend. See you soon.